Okay, get this. Imagine a creditor trying to take money from you, but it's money you haven't even borrowed yet. I mean, that sounds completely impossible, right? Well, you're not going to believe this, but a recent court ruling down in Florida just dealt with this exact situation. And it's created this brand new financial shield for homeowners. So let's break down how this whole thing works.
All right, so here's how we're going to tackle this. First, we'll look at the new financial shield this ruling created. Then, we'll dig into the story behind a $55,000 debt that started this whole mess. After that, we'll get into the real legal nitty-gritty, the whole credit versus cash debate. Then, and this is super important, we'll cover the exceptions. And finally, we'll wrap up by looking at what this ruling really means for everyone.
So let's just dive right in. This court decision is, well, it's making some serious waves. It's offering this really surprising new layer of protection for homeowners, but only if they have a very specific kind of loan. And that really brings us to the core question here. And it's kind of a mind bender when you think about it. Can creditors actually take money that you haven't even borrowed yet? Can they legally force you to pull from a line of credit just to pay them back? And the answer from a Florida appeals court is a big, fat no. They ruled that any untouched funds in a reverse mortgage line of credit are now officially shielded from creditors. And let me tell you, this is a huge deal. Okay, so to really get how we got to this point, we've got to look at the specific case that set this whole thing off. It's this long-running fight between a company called JLM Enterprises and a guy named Norman Desmarais. And look, this was not a quick fight at all. This thing started way back in 2011 when JLM Enterprises first won a judgment against him. Fast forward a few years to 2018, and Desmarais takes out a reverse mortgage, one of those HECM loans. Then, by 2024, the creditor is still trying to collect, and that's when they decided to go after the unused money in that credit line. And we're not talking about a small amount of money here. The debt was $54,863.89. It's this figure, almost 55 grand, that kicked off more than a decade of legal drama. Now, it's important to note this wasn't just some simple unpaid bill. Oh no. The court had actually found that Desmarais tried to hide his company's assets, a fraudulent transfer, specifically to avoid paying this debt. And that's why he was on the hook for it personally, not just his business. All right, let's get into the real heart of the legal argument here, the credit versus cash debate. I mean, it all boils down to one fundamental question. What exactly is an unused line of credit? Is it actual cash sitting there, or is it just the idea of cash? So you had two totally different ways of looking at it. On one side, the creditor argued, hey, he can get that money anytime he wants, so it's just like money in a bank account. We should be able to garnish it. But on the other side, the court said, not so fast. They ruled that those funds aren't actually the homeowner's property, not until they're physically withdrawn. Before that, they're just potential funds. And here's a direct quote from the court's decision, which really sums it up. They said, the undistributed funds are accessible only when requested by the homeowner. See? That request, that action of drawing the money, is the key. It's the magic step that turns potential money into real property. Until then, it's just a number on a piece of paper.
So what's all this based on, legally speaking? Well, it's a really powerful concept in Florida law called the homestead exemption. Basically, it's this protection baked right into the state constitution that says, for the most part, creditors can't take your primary home to cover your debts.
And here's where the court made a huge leap. They took that protection, which has always been about the physical house, the bricks and mortar, and they stretched it to cover the undisbursed funds that are secured by that house. The logic was, since the reverse mortgage is tied directly to the protected home, the money that hasn't been touched yet gets that same protective bubble. But, and this is a big but, this financial shield is not bulletproof. The court was really, really clear about the limits here, so it's super important we go through the exceptions. So let's look at what was safe. There was about $62,000 just sitting in that reverse mortgage line of credit. It was untouched. And because he hadn't actually requested to withdraw it, the court said, nope, that's protected. Hands off. Now, in total contrast, let's look at what wasn't safe. A measly $250. That amount, which was sitting in a normal bank account, the court said could be garnished. So why the difference? Simple. That money had already been withdrawn. It crossed a critical line, transforming from protected credit into plain old garnishable cash. And that right there is the bright line the court drew in the sand. That special protection, it only exists as long as the money stays in that untouched line of credit. The very second, a homeowner withdraws it and puts it into a personal bank account, poof, the protection vanishes. It's no longer considered part of the homestead and becomes fair game for creditors.
The court also pointed out another interesting exception to keep in mind. Let's say your reverse mortgage is set up to give you automatic monthly payments. Well, in that case, those payments might be up for grabs. Why? Because they're already designated to be paid out to you, which is totally different from a line of credit you have to actively decide to use. Okay, so let's zoom out a bit and look at the bigger picture. What does this ruling really mean for homeowners and, for that matter, creditors all across Florida? Well, when you boil it all down, there are three major takeaways. First, this creates some much-needed legal clarity in an area that was, frankly, a total gray zone. Second, it officially treats that unused credit as an extension of your protected home. And third, and this is huge, it strengthens financial security for homeowners with these HCM loans.
You know, in the legal world, they have a term for this, a question of first impression. It sounds fancy, but all it means is that this is the very first time a court in Florida has ruled on this specific issue. It's brand new territory, and it sets a major precedent for the state. But there's one last really important thing to remember. This decision from March 2024, it's not totally final just yet. It's still pending any motion for rehearing, so it could potentially change. We'll have to keep an eye on it. And all of this leaves us with one really fascinating question, doesn't it? This ruling creates a powerful new shield in Florida. But will other states follow suit? It's a real game changer there. But since every state has different laws, the big question is whether this idea will spread. Only time will tell.